Welcome to this Killick Explains video, and this time another Viewers Ask video. All right, and this time what people have been asking me is, what are Bitcoin ETNs? People do ask those questions, and there's a reason they're asking, which I'll cover in a moment. So what is a Bitcoin ETN, even assuming you're comfortable with Bitcoin? What rules does it have to follow, and who's it aimed at? Okay, now before that, let's just set the scene, if you like. If you're thinking, I would like to buy cryptocurrency, and of course Bitcoin's not the only cryptocurrency out there, then if you're looking for the basics on that, you'll need to watch some of my other videos or do some homework. This is not a what is a cryptocurrency, it's what's a cryptocurrency ETN, whatever that is. But if you're buying cryptocurrencies, you've got a few choices, and this is another one. So you could just buy it direct. You could go and set up a wallet and buy yourself some Bitcoin and put it in there, along with any other cryptocurrencies you might have your eye on. You can buy derivatives based on these cryptocurrencies. There are things called Bitcoin futures, and there is another video by me on that topic, which I'll reference at the end. Here, what I want to focus on is this thing called an ETN, or an exchange traded note. And the reason people are asking about it, I think, is there is speculation, more than speculation, that the FCA might make these things more widely available as a safer route in to cryptocurrency for retail investors. So now we're getting to the nub of it, all right? And what the thinking is the FCA may come out with some guidance, possibly later this year. Don't hold me to that, I'm not the FCA, and open up the crypto market a bit beyond professionals. At the moment, if you phone a firm like Killick and you're not a professional, and that's not your opinion, that's a thing, it's something they decide, they weigh up, then you will be allowed potentially into the murky world, as I see it, of cryptocurrencies, but other people are not. The exchange traded note might be the bridge that gets more people potentially into this space, and I'll leave my opinion on that to one side for now. So what is it? An ETN, it's basically an exchange traded fund backed by cryptocurrencies. Now, quick bit of revision and then a reference at the end. An exchange traded fund is what? It's essentially a listed share that tracks something else, or does its best to track something else. Now that something else could be a basket of other shares, FTSE 100, S&P 500, not that here. Could be a commodity like gold, not that here. What it's trying to track is cryptocurrency, Bitcoin specifically, potentially, all right? So it's basically offering you an exchange traded share that tracks the price of cryptocurrency. So it's meant to mirror the price. As the cryptocurrency goes up or down, so does this thing on the London Stock Exchange. It's purely passive, all right? There are no active managers here. It's just run through an algorithm, if you like, which is meant to keep it relatively cheap and keep it relatively simple. Now, you might be thinking, so far so good. Well, why wouldn't I go out and buy one of those through my broker? And some of you possibly will, but there are some drawbacks, or at least some things to think about first, even assuming the FCA license this more widely for a bigger part of the retail market. First of all, you will need to look quite carefully at what this thing is actually tracking. Is it going to track Bitcoin directly? By the way, I could say the same thing about a gold exchange traded fund or ETN. Is it going to track the asset directly? Is it going to track a basket? So the top 5 cryptocurrencies, however you define that. Is it going to use derivatives, synthetics? All right, and that matters because it will influence whether what you're buying tracks the underlying and to what extent. Secondly, you've got the double volatility problem. What I mean by that is crypto itself is pretty volatile, and shares can sometimes be pretty volatile. Put them together in the same room and who knows what could happen next. All right, so although the FCA's view is this will make cryptocurrency, for example, a little bit safer for the average investor, there's always another way of looking at that argument potentially when the thing is an exchange traded share. Just because that's a friendly thing we all know about, don't let that disguise the fact that the underlying is very different, cryptocurrency in this case. And of course, costs. I've said these things are meant to be cheap, meant to be simple, but do watch costs, because we've seen funds that track the likes of Bitcoin and cryptocurrency really ramp up the costs in a few places. Always ask about that. Now, to me, you know this is coming, I'm a bit of a crypto cynic, all right? This is what I call the lipstick on a pig solution. What I mean by that is what the FCA are basically trying to do is tart up something which I have some doubts about, But, I'm not the market. Other people will decide for themselves. Hopefully there'll be lots of risk warnings and so on around this thing. So watch out, this thing will be marketed. People will start buying it. So this is just an intro to what it might be. Watch that space in terms of what the FCA decide to do next. And on that note, if you're wondering about all the videos I just mentioned on cryptocurrencies in general, well, killick.com/resources has got them all. If you want to read about equities and exchange traded funds more specifically, then that guide there's not a bad one. And of course, there's our quarterly flagship magazine, Confidant.